Good morning, Academy 55 premium members and everybody else who's watching the stream on YouTube as well as in our group. David Cohen here on Wednesday, the 4th of June. It's now 4 minutes to 8 in the morning. Sorry, 4 minutes, used to saying that. It's 4 minutes to 10 in the morning here in the UK. Looking at the EUR USD on the 1 minute time frame. Following the Academy 55 indicators and strategy. Nice to see you all here. Just checking that I am indeed on live on YouTube, which is great. I am. This is a new thing. Okay, so please be advised if you are watching on YouTube, there is about a 10-second plus delay, and if you're scalping the 1 minute time frame, it can make all the difference. Anyway, getting back to it. So here we are on the EUR USD, and we are at a support and resistance line, a key, what they call a key area, anything with three zeros, a psychological area where long-time traders and short-time traders combined think about putting trades in, taking trades out, that sort of thing. So that's a psychological level, not an actual price level. So what we'll do is we'll have a look at the bigger picture. We will go take the indicators off, go on the daily time frame, and have a look and see what it's like on the daily time frame. And as you can see here on the daily, there is a effort to increase the euro. We are on this line, as I said, but it's not really telling us much. It's too much, not enough information really for because I don't really like drawing trend lines. They're very subjective. But let's have a look at the 4 hourly. And see if we can see any fair value gaps. There is a very small fair value gap just there. The price could be heading to, but because that candle there has been, because of the wick there and the wick there, that no longer is in balance. And also, there's a little bit of imbalance here, look, because on this candle here, this wick here, I think this wick will probably come to actually sit on 1.14051. It's got a little bit more way to go. It's so tiny, I don't think I'll bother drawing that in. So what we'll do is we'll put it on a line chart. And if I get two more points of interest, I will indeed see there we go. It bounced off that line there because that's the psychological level. And this area here is of interest. So we'll put this horizontal line in here. It was of interest there way back in May. And it was interest there where price bounced and stopped. So indeed, that's where we'll put a line. Going down to the hourly now. Nothing much changed there. So we'll go off the line chart, put it on the 5 minute. Oh, sorry, 5 minute. And we will indeed mark up our areas of interest. Sell zone. buy zone. Now I know this was in a sell zone. This is a sell zone earlier on because I was here an hour earlier. And so we'll go down to the minute, put our indicators on, and all of a sudden we got a sell going on. So we'll open up our MT4. Make sure you've got your risk reward in purple, your lot calc in purple, and your rectangle there, in case you need to close all trades, and all important 1%. Put the lines on. Now I want to go and I want to be unlock that. I want to go 2.2 pips away, which is there. And obviously I want to make it a sell. So we may be going for this sell. Well, I may be going for this sell. All trades taken on here for educational purposes only. Educational purposes only. But this is where I'd want to put the stop loss eventually. So we're waiting for price to come down. Will it come down to fill out these imbalances down here? It may well do within our allotted time. We don't know. But we are here waiting. Obviously, we've got to wait for the trend line to, well, it's horizontally off now. So we could be getting a little trade on the EUR USD. And I might as well short position. This is where it's going to be there. That's just started to go red. 2 pips, 2%, sorry. There we go. So this is where we are. And yeah, that looks good. Go. Right, so trend line hasn't gone red yet, which is interesting. I'm going to be waiting for the trend line to give us a little bit more of a encouragement by going red. All the time sacrificing the amount of pips from stop loss to entry, but that's okay because I want confirmation. I want more confirmation of a bit more of a sell, but that green trend line could go red at any second. Let's have a quick look. There are risk it on the 5-minute time frame because we got imbalances up there. So just waiting for a little bit more of a confirmation, a bit lower maybe, in anticipation of that trend line going red. I'm going to give it maybe about five or 6 pips, maybe. But if it goes red right away, I can indeed get into the trade. My dog's scratching at the door to get in. God, it's all going on. It's not good for karma, but there we go. So yeah, while it's doing that, that's okay. I shall let it do its thing. Because it could still be bouncing off that psychological level. Could be. So I'm going to give it a little bit more of a gap till I get into the trade. If I get into the trade, all the time watching that trend line, which is still green, but it could flash red at any stage, and I'm aware of that. I'm still only 3 pips distance between stop loss and entry, so that's fine. I could go up to 5, 6 pips maybe, but I'm looking for that extra confirmation of indeed we are on for a deeper sell. Because I'm well aware that price could still continue on up. Because we've got the last 3 candles, they're only minute candles, but they've been indecision candles, nothing decisive there at all. And that where it stopped on the last 3 candles, that obviously is at the moment, a hurdle. Right, I'm going to get in. I'm going to get in to the trade, but mindful of the fact that trend line is still green. I was anticipating it going red. It's horizontal. That could go red anytime now. And indeed, if price gets down to here, then we could see it changing. Going on the 5-minute time frame, looking. So these levels here, I perhaps maybe an area to look at. I'll put the line down there because these are imbalanced candles, and hopefully price may wish to sort out that imbalance. But here is a tricky area because we had selling and then we got buying power again. Will it do the same? Now, price acts historically on no matter what time frame you are on, can act historically, should I say. So this is a bit of a hurdle. But at the end of the day, it's only 1% that I am risking. And it really is not a big deal. Because, oh, right, as I know, the trend line has gone red indeed. Look, as I anticipated it probably would. Price went down a little bit more. In reality, it's only a pip or two. But and if the parabolic stars carry on down and eventually get to my stop loss, that indeed is when I would consider putting my stop loss to my entry in anticipation if price was to go back up again. It'll envelop that stop loss at parabolic star and then continue its journey up, breaching my original stop loss anyway. So by that time I would have a break-even trade. But here is the next hurdle for me to be interested in, because these are imbalanced candles because there's no selling power that side, no selling power that side. But at the end of the day, in a real life scenario, why put myself through this mental torment? I would be going down, putting the kettle on, making a cup of tea. So I'm governed by this parabolic star now. Once the parabolic star is down there, which would be, if it carries on this way, it would be in 2 or 3 minutes time if price hasn't progressed down to there. So if price gets there, I put my stop loss to my entry. If the next parabolic side comes down there, I'll put my stop loss to my entry. That's what I'm going to be doing. People do handle trades different ways. and that's all well and good. Every trade is different. I'm more of a cautious trader, I think, really. Some some traders are less so. So the parallel SR now has gone down below there. So I'm going to move my stop loss to break even now. So I have a risk-free trade. So because my thinking is if price comes up and swallows that parallel SR, push parallel SR down below there, we could have a lot more of a volume for the buy, in which case my stop loss is vulnerable. So by doing that, I am protecting my equity. That's the first rule of trading. Protect your equity. Second rule is protect your equity. So I have a risk-free trade now, whatever happens, and I'm quite happy with that. So now and it may well be that price gets to there and decides to come back down again. Now, if it does, I've seen that happen before. Of course, it has. Price will do it. So it might not even breach the stop loss and come back down again. I mean, I do second guess myself sometimes on this scenario because I'm trying to think what I should be teaching you guys and what I would do for myself. And I I I change my mind quite frequently because again, this is even now after 10 years of trading, even now, um, your mind plays tricks with you. And 90% of all trading is about your mindset. So that's why it's always a good idea just to, I should have left my stop loss there, go and make a cup of tea, and whatever happens, happens. Because price could come up to here, nearly hitting stop loss if it was up there, and then come back down again. Price will do what it's going to do. But I am also another important point I'm trying to make with this trade is the fact that we are um, protecting our equity. And I'll go back to, oh, right. So if I, oh, hang on. So here I got hang on, I was just going to put, I can't do that now. Ah, right. It's down there. Sorry, I'm trying to marry it up with TradingView. I obviously got that wrong. So I was down here. Yeah. So therefore I got in at, where did I get in? Right underneath there. That's easy to remember. Yeah. Okay. That makes more sense. There we go. So that's what I'm looking like at TradingView. So going on to the 5 minute, we have imbalance here. Is price going to tap into this imbalance here? This candle is not imbalanced because of that wick there on the 5 minute time frame, but this candle is. Sorry, I'll take the. So indeed, that's a hurdle I pointed out. 1.3901, and indeed we. Right. Price has now flipped the parallel star. In fact, I think I'm going to go. and go back to where I was originally up there. That's what I'm going to do. Crazy, eh? But I'm just showing you the power of if we lose, because I am in a in a mind in a difference of opinion within my own mind what to actually teach you guys, whether to accept a 1% loss, which is relevant, but also protecting your equity, which is also relevant. And if you say, as you can see, if I'd have left my stop loss at my entry, I would be taken out by now. But now I've taken it back to where it was originally, and that's where I'm going to leave it. Because I have seen price come up to here and then going down to get you 2%. But I also have seen price a bit of volume for the buy coming in and taking our stop loss out completely. I mean, sometimes I think I'm just too cautious. That'll be a good debate, really, what degree of cautions people have got. But just here is indeed at 190 there. Well, actually, there is a level where on the 5 minute, if you remember, we'll go back on the 5 minute, that is in balance. And is price coming down to take that imbalance and then carry on back up again? We hope it's going to carry on down to, oh, look, where our 2% is on the purple line. Is price on the 5 minute coming to hit our purple line? See what looking at a trade once you've made your mind up does for you. I could have avoided all this if I just made a cup of tea. But this it just plays with your mind, you know. There's no point looking at a trade once you've made your decision, i.e., moving your. Yeah, what I'm saying is all relevant, but at the end of the day, why put yourself through all this mind stuff I'm trying to explain to you for a mere 1% loss? And that's all it is, a mere 1% loss. Now, see what's happened there. Now, if I kept my stop loss at my entry, I indeed would have been taken out with commission there. And now you'd be a little bit peed off, but it's not a big deal. It really isn't a big deal. You had a break-even trade if that happened to you, and you can go away and come back some more, and you haven't lost any money, which is the way to really look at it. But we're now breaking the imbalance, which is good. And now, whatever happens now, because we've broken the imbalance, so now I'm going to put my stop loss to break even for a break even trade, because the parabolic saws now look are on my entry level. And this time, whatever happens, I'm not going to be moving that, because price has come down to hit that. Hang on, let's go back to trading. To hit that imbalanced candle there. I hope it carries down, obviously, for my 2%. And let's just see if that happens. Sorry, I for anybody watching, I do realize I am trying to look at a trade from all angles, from a beginner's angle, from my angle, what I would normally do, what I should tell you guys. So it's quite difficult for me to come to sort of, I mean, the actual getting into the trade, the support and resistance lines and the imbalance for me, training wise, is no problem whatsoever. It's just when what is the correct thing to do, and basically there is no right or wrong answers. It's got to be left up to yourself how you proceed. And I'm still in debate with myself what we should actually be doing as far as that's concerned. Whether and both are true. See, whether you just accept the 1% loss, which is no big deal, it isn't, or whether you should protect your equity by bringing your stop loss to your break even, and then have a break even trade. Both are have got relevant good and bad points. And what I'm saying is it's up to you guys which one you do. And as a trainer, we've got this Academy 55 indicators and strategy, which is really it's the best work I've ever done in the last 10 years. It really has. We've been doing this successfully now since February 2024. Made a lot of people a lot of money by getting themselves a proper home account, passing their exams and stuff like that. So this bit here, what I've been explaining, putting your stop loss to entry or leaving it where it is, that has entirely got to be your choice. But I'm giving you both scenarios and both are relevant. That's basically it, really. But that's what I'm going to be doing. You could, in fact, leave your stop loss there, uh, just here, but I'm not going to because it's relevant. Yeah, you could leave your stop loss there where it was originally. Now it's tapped into that imbalance, see, and on the 5 minute time, we got imbalance down here. So hopefully it'll want to come down to fix out this imbalance here, but that might do it later on in the New York session even. We don't know. But it's cut down the immediate imbalance and it might be going up now to take more orders. And if it does, it does. It's fine. But by doing that, it will also envelop that and drag that parallel side down below, and maybe a deeper buy will ensue. But by which case, I don't really care because I've broken even, so I haven't won nothing and I haven't lost nothing. So there's all these different scenarios going on that could happen. I mean, we might get sideways action for some time, and I might be in a scenario in my normal life. I might not wish to carry on this and just take whatever money I've got in there now, which is $810, which is quite nice on $100,000 account, and then come back later on when my lifestyle um, affords it. When my lifestyle is better for that, and I'm perfectly fine with that as well. But that is individual choice. So what I'm going to do now is I am going to open chat for anybody who wants to, and all our premium members who are of Academy 55 watching this, if they want to got any questions or any observations, go ahead. What time do I like to trade US 100? That's easy. I like to trade that one on or about 2:30 in the afternoon UK. That is when the New York Stock Exchange opens. That's when the volume kicks in. So that's, yeah, that's the answer there, Raj. That's a nice, easy question. No problem there. So that's indeed what I would do. And also, of course, following the Academy 55 indicators of strategy on the 1 minute. So this is going to do what it's going to do, right? Okay, so I'm going to leave that there a minute because what I'm going to do is that's reminding me. So what we're going to do is I'm going to go back. I haven't done this. Something might not happen of it, but I'm going to indeed get the the NAS 100, US 100 is the same thing. Well, the reason I mixed it up at 10 o'clock is because we had lots of red flag news, Nikki. But yeah, mixing it up is good as well. Anyway, so I'm going to leave that there. The trade is the trade, right? It's going. The EUR USD. We'll come back and have a look at that later on. But what I'm going to do now is I'm going to have a look and see what happened at 2:30 yesterday afternoon on the NAS 100. So if I go to Tuesday, 14:30, 14:30, have a look. And there we are. Indeed, that's where we are. So I get my time machine and go to 14:30, which is there. Now I'm at, now I know there's a sell zone there, so technically I'll be taking the next sell. But let's see what happens after 14:30. Going down on the 1 minute. So we've got this buy here, but too late to get into that. We are at 14:29. Hopefully you'll see the candles get a lot bigger at 14:30. You can see how small they are there. So we'll just play it along bit by bit and see what happens. Whoa, look at that. 14:30. The volume kicked in for the buy, but the buy has already been there. And we know we're in a sell zone. So I know the next one is a sell because we were in a buy zone. Sorry, sell zone. Price had gone into the sell zone. So let's see what happens. But it's still buying. Right. So interesting. So let's go and put a short position on. I'm not going to be in the trade yet. I keep 2,000 units, which is, and this is indeed where stop loss would be. Once the trend line has gone red, if it does. So I'll tell you when I'm in a trade. I'm not in the trade yet because the waves still, let's play it on by one. Right. And indeed, that's where the stop loss would be. I'll just make this a bit bigger. We've got the sell, but the trend line's still green. Let's play it on by one. And this is where I'd be in the trade here. Trend line's red. Let's see what happens. Oh, no, I would have lost. See, there we go. And that's just trading. I would have lost that trade, unfortunately, because it's way too volatile, but it's around the 238. Sometimes, most of the time, you get a trend, and because the volume is in, it comes down there very, very quickly. But this time it didn't. So therefore, unfortunately, we lost 1%, but that's no problem. Oh, just won me trade. Anyway, there we go. So there we go. Back on the EUR USD in the present. As you can see, that's where I was. And that wraps it up quite nicely. So another 2% for me. I'm doing quite well so far this month. And basically, I'll see you guys again tomorrow. Let's have a quick look and see if there's anything on there. No, nothing on there. Nothing more on chat. So for me, another 2% win. So thanks very much for watching today, and speak to you soon. Bye for now.